Welcome back. My name is AlexBeltran. I talk real estate, and I'm beginning to realize that I should have just named this video the 5 reasons to always buy real estate. But alas, here we are. Let's get started. Number 1, cash flow. Frankly, level 1 of real estate. What functioning human being doesn't understand cash flow? You purchase real estate and you rent it out for more than what the mortgage and the expenses are. Boom. Cash flow created. Easy peasy, baby. You get yourself 10 doors profiting $200 a month. That's $2,000 with relatively little effort. Oh, and come a little closer. Every 2 to 3 years, you can raise your prices, but the debt stays exactly the same, thus creating equity and a delta. A little bit more on that later on in the video.
All right, so I'm editing this video right now. I'm realizing I didn't clarify. The underlying debt stays the same. So like your mortgage, obviously property insurance, maintenance, all that goes up, but the underlying debt is going to stay the same, assuming you got a fixed rate home loan. All right, back to the video.
The only thing that blows the mind of a level 1 real estate investor is talking about negative cash flow. Yes, that is a thing. No, I will not talk about it in this particular video. Just know that there is a time and a place and a reason to negative cash flow. And reason number 2, appreciation. If it hasn't become abundantly clear, home prices are not going to go down anytime, at least not in the foreseeable future. Not to get all politicky, but you know what I mean.
Just been released, and it shows inflation rose by more than expected in March.
Well, exactly like what I was talking about, cash flow. Value goes up, debt stays the same, you create equity. We all get that. But appreciation is how the rich get richer. As money loses value, assets only increase in value, which is why the current economic situation that we're going through right now is so freaking scary. If you don't own assets and the market crashes, your market crashes down. If you own assets and the market crashes, your market crashes up. If you think the divide between the rich and the poor is scary right now, imagine how catastrophic a K-shaped market crash would that would be devastating, which is why you want to buy appreciating assets. Real estate is just one of the more obvious ones. Obviously, no guarantees, do your due diligence. On the flip side of that coin, you have number 3, depreciation. And look, once again, I don't want to get all politicky. That's not what this channel is all about. But objectively speaking, America is ran by wealthy people that make decisions that benefit the rich. Even when they make policy decisions that are geared towards helping the poor, it's the rich that benefit from these. Why? Because it's the rich that implement these into place. Think about like low-income families that can qualify for mortgages. Well, who funds those mortgages? Who creates these mortgages? The banks, the financial, the rich. Or just pick whatever program comes to your mind. Objectively, who benefits? And it's the same thing with the tax code, which if you want to get rich like as quickly as possible, read the tax code. I'll admit it's a snooze fest, but it's literally the rules to the game that is being played. It literally blows my mind that more people don't do this, or at least consider looking into it. Imagine playing chess and not knowing the rules, and then when you go to a chess tournament, you get pissed off because you get disqualified for lighting the chessboard on fire. Read the damn tax code. In real estate, you get 27.5 years of depreciation. What does that mean? It means that politicians got together with all their rich buddies and said, how long till a house basically breaks down and is unlivable if you don't put any money into it? And they came up with, boom, 27.5 years. So any money that you use to improve the house can be, say it with me, depreciated. It's basically money back in your pocket. Now, full disclosure, I'm not a CPA. Always do these things at the guidance of your CPA. Due diligence, baby. We all have to do it. When you buy real estate, on the first year, you get 7 years of depreciation. What a bargain. Depreciation is how the rich don't pay taxes. Technically, they do pay taxes, just in a very different way. Basically, the tax code, at least from my understanding, is creating economic growth and job creation. For example, this new house that you just bought, it's gonna need new windows, new water heater, and a new roof. Well, now this house has created jobs and economic growth, right? The window manufacturer has to buy the raw ingredients to create these windows. They have to pay someone to manufacture these windows. They have to pay someone to ship these to the local warehouse or whatever the case may be. That warehouse is going to then use their employees to move them around the store where I'm going to buy them. They're going to ship them to me. Someone is going to install them for me. And the same goes for water heaters, roofing, or electrical, or whatever the case may be. You can see how this one house has now created multiple jobs and economic growth. Now, agree or disagree, it really doesn't matter. That's the thought process behind this. But this depreciation thing works best when you have multiple businesses. Once again, I'm not a CPA, so I might not be using the right vernacular, but ultimately you can use depreciation to offset profits from other businesses, or however your CPA allows you to do this. Check with your CPA. However, at least from my experience and the experience of other real estate investors, if you do this correctly, your CPA is going to be calling you constantly, begging you to buy more real estate so that you can offset more profits. Now, you can disagree with how these taxes are implemented and all that good stuff, but at least for the time being, given the system that we have right now, this tax code is doing exactly what it is meant to do. Keep the economic machine moving. Like I said, read the tax code. Just take a step back and look at this objectively, right? Objectively, the tax code is encouraging me to buy another house to create cash flow, appreciation, equity, and wealth to offset my profits. Oh, and in the process, I am creating more jobs. Yeah, please. Sign me up. I'm going to repeat myself again. Learn the rules of the game that's being played. Number 4, equity and ultimately free wealth. Every single payment that is paid to your mortgage is increasing your equity, which translates to increasing your wealth. And if a tenant is making that payment for you, what is happening is wealth is being created on your behalf for free, otherwise known as infinite returns. And look, full disclosure, I'm about to veer off topic just slightly, but I promise I will swing back and make it relate to real estate. Just be patient. I personally have 4 big passions: real estate, architecture, travel, and horology. Horology, not horology. Get your mind out of the gutter. Horology is the study of the measurement of time. Actually, the measurement of time is chronology, but a lot of people tend to use horology and chronology interchangeably. Most of the time people are talking about, the instrument that is used to measure time when they're talking about horology, i.e. watches, i.e. luxury watches, which clearly I'm not a luxury watch guy, I'm a Garmin guy. Although, if Armand Piquet wants to give me a Royal Oak, or even Gerger Le Couture wants to give me a duometer, I will not say no to those. And look, I apologize, I'm gonna get into the weird processes of my brain, but I've always wondered to myself, what is the point of time? Because scientifically speaking, time is a measurement and a direction, right? Meet me at this corner and this corner at this said time, or the classic 2 trains leave from 2 different stations. We all know that. On a philosophical level, time is, pointless. And on a financial level, time is a measurement of output, right? Am I willing to output the energy to do this job for $20 an hour? Is kind of one of the more basic ways of looking at it. However, I always like to look at stuff from the 30,000 foot level. You know what I mean? The thing I like to call the machine, Rage Against the Machine, the machine. Now, just as an example of this machine, think about California, where your effective tax rate is 57%. They're going to tell you that it's much less than that, but once you combine federal, state, and franchise, it's 57%. They won't admit it. In fact, they hide it by using fancy accounting terms. And look, it is what it is, but ultimately what that means to you is that from January to essentially the end of July, you were working for Gavin Newsom and Gavin Newsom alone. And this is where things go off the rails and why a lot of people really despise California. Think about it. The average American spends 35% of their income on housing before taxes. California is going to try to trick you and say, here we spend 28% after taxes, which once you account for before taxes, it's actually 42%. And if you're thinking to yourself, wait a minute, the math ain't mathin'. Yeah, you're right. That's why I left California. It's literally highway robbery. That's not taking into account all the gas tax and all the other bullshit that you have to pay. It is highway robbery at its finest, and people don't understand that. But I digress. Your time is very valuable, and it's something that you will never, ever get back. But think about that on a day-to-day level. Think about this, just for like a split second. Every time you punch into work, the first third of your shift to even half does not belong to you. It belongs to the government. It belongs to the banks or your landlord. And it's this machine, this system, or whatever you want to call it, that I would much rather have it working in my favor. And this is the system that is paying down my debt every single month. And I know this took a little bit of a matrixy turn. I know it sounds harsh, but it's a system that we currently have in place. And if you're asked to fight a war that's over nothing, I'd rather join the side that's gonna win. Once your assets are paid down and with enough time, you get to experience the fifth reason for buying real estate ever: leverage. With leverage, you can take a loan out against the equity of the property, tax free. Are you beginning to see how the rich use debt to get rich? What's crazy is that after a while, they don't necessarily look at you. They look more at the asset and scrutinize that. And that's if you want to stick with the traditional banking system, because leverage can take you to some very wild places. You can use assets to leverage gambling money in Las Vegas, or you can use that same leverage to create generational wealth or solve homelessness or solve, food insecurities. Be very careful how you manage leverage. So choose wisely. Anyway, that's all I have for you guys. If you found value in this video, go ahead and hit that subscribe button. Other than that, I will catch you guys next week. Peace.